The Fed15 podcast is presented by Serving Those Who Serve, a financial planning practice serving federal government employees and retirees all over the country. This podcast is for informational purposes only and is not intended to be taken as financial advice. All listeners should consult their personal advisors before taking any action. The opinions expressed by our hosts are their own and do not reflect the views, policies, or position of either Raymond James or Serving Those Who Serve. Securities are offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services are offered through Raymond James Financial Services Advisors, Inc. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services, Inc.
Welcome to the Fed15 podcast presented by, say it with me, Serving Those Who Serve. Each week, we discuss the latest news and info that feds need to know in 15 minutes-ish or less. So whether you're a seasoned federal employee just starting out in your career, we have you covered. So grab your coffee, your energy drink, your green juice, whatever gets you going, and kick back, and we will tell you what you need to know but might have missed. Today, we are your host. I'm Dan Sipe, and I am joined by one of our rock star planners. You know and love her from the webinars, Jen Meyer. Jen, how are you?
I'm doing well, Dan. Thanks for having me today.
Always a pleasure to have you on. And folks, I know podcasts aren't supposed to exist within space and time, but a whole lot of people got clobbered with snow. So I think it's safe to reference that. So Jen, your fam do okay through the snow? Get dug out?
We did. We got a plow, I think, on day 3, but my husband and my son were at home, so they took the brunt of the shoveling and getting everybody cars cleared and all of that. So we were out within a couple days, which I know some people, I think most people are out now, but schools are still closed. You know, they might get closed again tomorrow.
Yeah, it's a bunch. And I feel for your husband and son because I was at it too with my crew. Really, the worst part of it was that you were basically doing it in a freezer.
Mm-hmm.
You know, so a lot of times when we get snows, it's, 32, 33 degrees, you go out, you break a sweat. I don't think I ever got past shiver to sweat, and doing it. So I'm going to guess this has you longing for soccer season.
It does.
Yeah.
I'm always longing for soccer season either way, but yeah, it's too cold. I'm ready to be done with cold. I'm ready to have it be warm and play some soccer if we can.
Well, we got Groundhog Day coming up, so fingers crossed. Now, can you at least escape to indoor soccer? Is that a thing? And does your crew do that?
So, in the past, yes, but no, we are all outdoor all the time right now. And my son is actually playing for a team, and we were out there last weekend.
Yeah, you can plug the team.
He's playing actually for 2 teams. One is a MSI local Montgomery County team, and then the other is actually a team called Ristosi. And Ristosi did have a game 2 weeks ago outdoors, and we were out there with our blankets and our coats, and we loved watching him play as always. So
I'd be really interested what that ball feels like kicking if it's really cold.
Yeah, I don't want to know. I'm glad it's him and not me. I'm happy to be a spectator.
Gotcha. Okay, so folks, we've got a couple of interesting things today, that might be a little off the beaten path for what you're used to from us. Now, one is something we feel is really important. We're going to tackle the skinny on TSP loans because that's the type of thing you want to handle correctly. And Jen will be covering that. And then I'll be talking a little bit about something. This is not designed to scare people, called a benefits cliff. And it has to do with federal funding of some of the benefits that all of our feds now, since they changed Social Security law, could be impacted by. So Jen, why don't you kick us off with what folks need to know and understand about TSP loans to get it right?
Yeah, absolutely. So it's interesting because I talk to a lot of feds on a daily basis.
You do.
And there are an awful lot of feds that have TSP loans. And, I want to talk just a little bit ultimately the pros and the cons of having TSP loans. And TSP loans can be very helpful. They are designed basically to provide access to retirement funds for employees, due to unforeseen circumstances, major purchases, things like that. And the idea is that, hopefully people are more likely to put money into their retirement accounts, knowing that they can get access to those funds if needed. And so there's a couple things that people need to know in order to be eligible to start with. So you have to be in active pay status to be able to take a TSP loan. That means you can't be retired. You can't be separated from service. You do have to be in active pay status. You have to have a minimum account balance of $1,000. And you cannot have taken, or actually you cannot have repaid any TSP loans within the last 30 days. So those are the things that, kind of make you eligible. And then there's basically two types of TSP loans. There's what's called a general purpose loan, and that typically will allow you a repayment period of 1 to 5 years. And there's a $50 processing fee to take a general purpose loan. Then there's a primary residence loan, and that one has a much longer payback period. You can take that up to about 15 years. Obviously, a primary purchase loan is meant for building or purchasing a primary home. And then there's a $100 processing fee for that type of loan. A couple things about the TSP loans that I hear from people that, they think, oh, well, it's a good idea to take a TSP loan because the interest that you pay on a TSP loan is tied to the interest rate on the G fund. And it is, you're paying the interest on the loan and you're getting the interest on that loan. And so people think, well, that's really cool. I'm going to pay myself back when I take a TSP loan. Theoretically, that's true, but there are some pitfalls that I think far outweigh that maybe what looks like a good benefit. One of the things, so when we talk about pros and cons, and again, like all things in life, there are pros and cons to TSP loans.
Sure.
So when we talk about the pros, right, there's a couple of things here. So first of all, there's no credit check. There's no underwriting, right? So if somebody does have a not so great credit score, they don't have to worry about that with a TSP loan. Again, I already mentioned the interest rate is tied to the G fund rate, which might be lower than what you can get in sort of the private lending world, a personal loan, things like that. One of the other advantages that people like is it's very simple. It's a fast application process.
Sure.
Typically, people can get their money within 7 to 14 days at most. I will say, and this is kind of one of the nuances that I think a lot of people don't know, is that if you are thinking that you might have to take a TSP loan, you want to make sure that your bank information is on file because it has to be on file for 7 days before they will send the money. So, that can be an important thing. If you think you're just going to get the money in 3 or 4 days, if you don't have your bank information already on file, there's going to be a delay there.
Great tip.
So that's one thing. And then, of course, as long as you pay the money back, and it does get paid back through payroll deductions, and as long as you do pay it back, then there's no taxes and no early withdrawal penalties would apply, right? But the key there is you do have to make sure that you pay it back, right? And I'll talk a little bit more about what happens if you don't pay it back in a minute. But I really want to focus on the cons of taking a TSP loan because this is such a big one and so many people have a hard time understanding it, right? So the biggest thing is that when you take that TSP loan, whatever the amount is that you take, that money is taken out of the investment part of your portfolio. And when they take it, they're going to take it out pro rata based on how you have your TSP funds allocated. So essentially what happens is you're taking that money out of the market. Hopefully you're invested in a diversified portfolio and you do have money in the stock funds as well as all the bond funds. And so you're losing the growth on that money while the money is out, right? And again, especially when we're talking about these longer term loans, right? You're missing out maybe on 5 years of growth in the market. And if you look at what the market did, even just the last 3 years, right? You can imagine you lost the money that was loaned out, didn't participate in that growth that we've had the last couple of years. And so when you're talking about your future retirement, you're really hurting yourself when you take a TSP loan. And again, I see that all the time with people. So to me, and we kind of call it the hidden costs, right? You don't see it. It doesn't show up. It's not a fee. It's sort of hidden, but it really does impact your long-term retirement picture. So that's my little soapbox on that. Let's move on and talk about what happens if you do take that TSP loan and, for example, you separate from service, right? And this happened a lot last year, as everybody knows, right? There were quite a few rifts and people taking VERAs and things like that. So if you do separate from service, what happens to your TSP loan? First of all, you have a couple options. So you can pay back the loan right away, and that will keep you from having any taxes or early withdrawal penalties. TSP will also allow you to continue making monthly payments if you're separated from service. Lastly, and this is the one you want to avoid, is if you cannot pay it back, you're going to default on that loan and it becomes a taxable event to you. If you're under 59 and a half, not only are you going to be paying taxes on that loan, but you're also going to be paying a 10% penalty. So it's really, really important that if you do take these loans, number one, first and foremost, you want to pay it back as quickly as possible. Extended periods are not good. You want to make sure that if possible, you pay more each pay period than you have to. And certainly the other big one, I think, is that you want to continue making your TSP contributions, right? A lot of times people, when they take a loan, they think, well, I got to pay the loan back. And so they'll either reduce or, God forbid, stop making their regular TSP contributions. And you really, really, really don't want to do that. There is a kind of, I think, pretty neat little CFP checklist about loans. And so I'm going to just kind of go through that quickly here. Obviously, CFP stands for Certified Financial Planner. And these are things that are best practices, right? If you do have to take a TSP loan. So you want to compare the borrowing costs versus other alternatives out there, right? There are other alternatives often. You could do a home equity line of credit.
Sure.
You could do a personal loan. There's other financing options. So you want to make sure you understand what those costs are before you make a decision. Again, you borrow only what is necessary, right? Don't think, oh, I'm just going to take an extra $1,000 so that I, can go on a beach trip or something, right? You want to take what you absolutely need and no more. Whatever your repayment plan is, you set it and you stick to it. And again, maybe try and put a little bit more in if you can each pay. Again, continue your contributions as best you can. It's really, really important that you're getting money in every single pay period in your TSP. Again, set your payroll deductions above what is required and understand those rules if you do separate from service, whether it's voluntary or involuntary, right? So important. So hopefully that gives you guys a good sense of what TSP loan, sort of pros and cons are. And unless there's something I missed, Dan, I'm going to hand it over to you and let you talk about the benefits, Cliff.
Absolutely. Just one little nugget that I'll toss in there, mainly because I'm a graybeard on this type of thing. With the introduction of being able to continue to make installment payments on your TSP after you've severed, because a long time ago, that wasn't the case. It was you left, wham. One thing I can tell you is it's not like your credit card company. So you could have years of good payment history. And then if there's an interruption, that becomes an IRS thing. You know how you can talk to your credit card company and say, hey, I've never missed. Can you take the charge off? And a lot of times they'll do it. TSP can't help you with that. So make sure you're double and triple backed up on getting those payments in, because you might have taken the loan 10 years ago and you've got a bunch of it paid off, but still whammo, that amount is going to come into your taxable income. So yes. All right. So benefits cliff sounds super spooky, and it's something that I think everybody has heard about, read about. And for all of us, including me as a planner, it's like, yeah, that's a little further out. Well, it's closer now than we might think. So, for example, we're going to be talking about the Social Security Trust and the Medicare Trust. So the 2025 Trustees Report for Social Security projects funds depletion by 2034 without legislative action. So what does that mean? Does that mean nobody gets a Social Security payment anymore? No. It means the payments could be reduced by about 20%. So whatever you're supposed to get, you're going to get 80% of it. But that's still something. It would be a jolt to a heck of a lot of people. The Medicare Part A trust funds, that's the hospitalization side. That's the part that is free. It's not really free. You've just paid into it over your career. So that covers the hospital side. And pretty much all of our retired feds are interfacing between that and their FEHB. So that would deplete in 2033. So we need to talk about what would happen in both those cases. Does that mean that Medicare would stop paying for hospital bills? Not at all. It would mean, just like with Social Security, there might be a reduction. It might be a 20% reduction in what they're paying, which means now your other health insurance is picking up more. So we're not exactly sure how that will shake out, but I'm reasonably confident that it wouldn't be apocalyptic. It's important to note that Medicare's Part B, which is the general medical, and D, which is prescription drug, are funded annually through premiums and general revenue, and they do not face any depletion risk. So what does this mean for our feds? This is something that we should keep an eye on and plan some buffers into it. So we should neither ignore it, nor should we consider it to be a total catastrophe. And I want to stress one thing, because when you're talking about one federal benefit that might be behaving a certain way and having a problem, there is no equivalent trust fund cliff that exists for federal pensions. Okay. So FERS and CSRS benefits are paid through the CSRDF and backed by the U.S. Treasury and reviewed annually. So no issues there. So what is a good plan, or what are some good actions to take? If you are retired right now, take a look at your expenses that are covered by your FERS or CSRS pension, and hopefully your judicious flow from your TSP or your investment assets, and see if they're covering everything. Because a lot of times we meet people that the combination of pensions and Social Security might be covering everything. So if TSP can fill that gap, you can kind of self-insure for it. You'll want to make sure that you have a generous amount, if all your money is still in TSP, a generous amount in GNF so that it's stable and it's available for you to utilize. I know you can't draw specifically from that one, but you can take withdrawal and then immediately rebalance, which is pretty close, so that you have that. And above all, you want to stress test things. You want to model what that 20% reduction is going to look like. And you may need to identify some discretionary spending adjustments, travel, vehicle purchases, large expenditures to go along with that. I would recommend, because we've got some time here, that you start boosting your emergency fund. If you've got time to prepare, which you do here, start salting some money away so that you have it and you're able to go to it. What that's going to mean is, just like if you have a lot of bonds in the TSP or in your IRAs, there's a reduced need to sell equities in the event that there's also some market volatility going on with that. And so you want to pay attention to the tax impacts here. So you don't want to go crazy, pull a lot of your TSP out right now to get it in cash so you have it on hand, because that could impact you for IRMA payments with Medicare, and you could go into another tax bracket. So you don't need to look forward with terror about this, but it's probably a good idea to start building it in. Now, what do I, Dan Sipe, speaking for himself only, think is going to happen? I think eventually Congress will stop kicking the can down the road. I think there will be adjustments to retirement ages, probably for some future generations, for Social Security, and an absolute increase in payroll taxes. And I think we'll see that on the Medicare side too. I'm not saying don't worry about anything, but full faith and credit is also built upon that Congress pretty much has unlimited ability to tax. So be prepared, project that into the future, plan now for 2033 and 2034. And above all, don't panic. Build in some income floors, stress test your assumption, and be disciplined in your approach. And we'll get through this together. If you are looking for a faithful Sherpa to take you up the mountain and bring you back down safely, we would be happy and honored to fulfill that role for you. But be disciplined through this period, and then be prepared, stay flexible, and focus on the controllable variables that you will have. And they are there. And we will get through this together. So that's what I got on that, Jen.
Yeah, it's so true, Dan. I mean, people tend to panic, right? And it is scary. But if you plan and you're prepared, you don't have to panic. And that's the goal, right?
Absolutely.
All right. Well, I think that's probably all our time for today. But again, it's great to be here. I know Dan and Caitlin will be back together next week to bring you all the updates so you can make the best decisions you can about your career and financial well-being as a federal employee.
Absolutely. And please, please, please hit that subscribe button on YouTube or Spotify. Yes, it allows us to let you know when episodes are coming, but you help us amplify, because the algorithm rewards us. The more people subscribe, they say, hey, Fed should see this. And if you found this to be valuable, please subscribe and please share it with your friends and colleagues.
Yeah, absolutely. So for more information on any of the topics we covered today and more, please check out our blog at blog.stwserve.com. You can also subscribe to our newsletter if you haven't already. It's the weekly serving. You can do that via our website. And of course, we always want to give you the latest information and get it delivered to your inbox every week.
Absolutely. And don't forget about our webinars.
Yes.
We have our live webinars every single month. We've got at least 5 live ones. We are also diligently posting video on demand for what we like to call our electives. So our live ones we consider core, and then the electives might be FEGLI or things like that. We are feverishly updating and recording those, and they will be coming to the website very, very soon. But as far as the next live webinars that you may want to attend, on February 12th, we have the ever popular FEHB Medicare and TRICARE webinar. That's from 1 until 4:30. Caitlin will be hosting that. And then on February 18th, we have the financial planning webinar. And this one's going to be special because we have the KD team that Caitlin will be presenting the financial planning content, and I'll be her wingman for that. So that's
super excited for that. Super excited. That's going to be great. It really is.
Well, what Caitlin's doing, it'll be great. I'll try not to mess up my part. And of course, if you are looking for a individual one-on-one personalized approach to education and planning, hit us up at info@stwserve.com. We'd love to talk to you. You can also go through our website and schedule an appointment directly with any one of our amazing team, Jen, Matt. I come off the bench, you might get stuck with me, but you can tell me halfway through that you want Jen, and I'll make sure the next one's with her. You won't hurt my feelings. I'm used to it by now. But if you're looking for that, we are happy to do that for you.
Absolutely. All right. Anything else for today?
I think that's it.
All right. Well, thanks for having me.
And thanks for coming on, Jen. And folks, thank you for listening to Fed15. I'm Dan Sipe.
I'm Jen Meyer.
And I will see you next week.
Take care.